Last week, the presidency sprang a surprise on Nigerians when it announced that the Nigerian National Petroleum Corporation had made a profit for the first time in 43 years of operations. President Muhammadu Buhari, who made the announcement in his capacity as Minister of Petroleum Resources, said the state-run oil firm had declared a net income of 287 billion naira in 2020, a significant improvement over the loss of 1.7 billion in 2019. Buhari went on to direct Nnpc to publish his 2020 audited financial accounts. Also, after committing to $1.5 billion to rehabilitate its Warri and Kaduna refineries, Nnpc received the go-ahead earlier this month to invest $2.76 billion for a 20% stake in the 650,000 barrels per day Dangote refinery, which is still under completion. But this was not the last, as U.S. documents recently revealed how a former Glencore trader, Anthony Stimler, pleaded guilty to paying millions of dollars in bribes on behalf of Glencore to officials in Nigeria, including Nnpc, to secure crude oil shipment contracts. Well, joining us now from our London studio to make sense of all of this is Arise business analyst Bode Ososami, a certified accountant, chemical engineer, and change and management expert. Mr. Ososami retired as a director of Accenture, where he led the firm's energy practice, mainly in the upstream oil sector in Nigeria. Good morning, Mr. Ososami, and thank you for joining us.
Good morning, and thanks for having me on the show.
Well, first, let's discuss the good news, the announced turnaround in Nnpc financial performance. We're yet to see the detailed accounts, although we have it on good authority that Nnpc will release the audited accounts sometime this week. We hope they do so. But is it too early, therefore, to be applauding the reported performance?
Well, Ruben, there are things we can applaud even before we see the financial statements, although it is quite odd to be announcing results with no details. I believe in the future, Nnpc Limited, they will not get away with that. And more importantly, organizations like Nnpc are going to be judged based on performance on quarterly forecasts, comparison with peers. But Nnpc, as we know it now, is an unusual statutory corporation set up by special legislation, not yet under Company and Allied Matters Act. So there are things we can applaud. Three things quickly. First, transparency. Clearly, we have seen much more transparency than usual, more open communications in committing to timely audited accounts, which we know will be signed off by credible accountants. After over 40 years of operations, it's now possible for analysts and potential partners and investors to track, to see a track record that they can believe in terms of financial performance. Of course, errors or lapses will have serious consequences, not just on Nnpc, but on the auditors, as there could be serious financial implications. The other thing we can applaud, which looks like is what is looking like a new commitment of Nnpc leadership to transform itself to be more commercial in its orientation and culture. So we are seeing the beginning of a performance culture embedding in Nnpc. Thirdly, Nnpc belongs to all Nigerians, so it has a very wide stakeholder group. It doesn't belong to the government in power. So losses or wrong decisions ultimately affect how much government will get and funds that will be available for states, for social and human capacity projects. It affects how much government will be able to borrow, fiscal space for expenditures, and so on. So I think that the fact that Nnpc is carrying along its wider stakeholders with its decisions and being more open is a good thing. But more specifically on the reports, the GMD Melekari, he was quoted as saying procurement costs were reduced by 30% as part of a major cost rationalization that has helped performance. My initial reaction is going from a loss of 1.7 billion naira to 287 billion requires us to interrogate the income statements and balance sheets closer. The other thing I must mention is when you look at return on capital, based on Nnpc 2019 audited account, capital employed was about 3.6 trillion naira if you look at total assets less current liabilities. If you apply a 13.2% ratio, that's the return on capital employed achieved by Saudi Aramco, which Nnpc, JMD say they want to emulate. That's another NOC. It means profits really should be about 1.7 trillion naira or $4 billion, not $698 million. So it's still a long way to go. You know, Saudi Aramco in 2020 made 49 billion. Emirates made 2.4 billion. Petrobras in 2019 made $10 billion. 2020 they made 1.14. But I think Nnpc has started. The other thing, of course, is if you look at 2019 balance sheet, you see an accumulated loss of 1.5 trillion naira, although there is a sizable foreign translation reserve. And that's the result of 43 years of losses. If Nnpc were not a statutory corporation and it had that level of accumulated loss, it will not be allowed to give a dividend. If you go under Kama, for example, no ordinary company can make losses for 43 years, Ruben, and be smiling to reporters and bankers. So Nnpc is obviously protected by all sorts of provisions, cushions, and arrangements that make almost everything possible. So what worries me is, are these protections or cushions going to be there forever? What is it costing Nigeria? Can Nnpc remain a going concern without them? And let's wait and see the signed results before we make further comments.
Thank you for that balanced perspective. Well, that transparency has been thrown into doubt because there are claims that Nnpc has been doing some balance sheet re-engineering and consolidating incomes and dividends from other independent entities not retained in previous accounts to boost profitability and disguise weak performance of its core businesses. What are your thoughts?
Well, we know that we know the income-generating streams of Nnpc. This is an organization we've had around for a long time. So by the time we see the results, it will be difficult for it to spring on any tricks. We know MPDC, for example, that's the upstream company, is the star business. NAPIMS is more like a cash cow. The gas company and pipelines and product marketing company, PPMC and Nnpc, they do make money occasionally, subject to all the subsidy challenges. We know the corporate headquarters is a huge cost center. We know all the refineries are dogs from the perspective of their performance. So there's a wide array of other businesses, and we can easily dissect the results. If indeed there are any new streams of income that are not in previous accounts, it will be clear. And we can also assess whether this is one-off or exceptional, or if this will continue to be there. But even a policy change or accounting revision has to be disclosed by the auditors. If there's anything unusual, the auditors will have to tell us that it's because of this that we are seeing this unusual spike in performance. So we must watch the percentage improvements in all the known income streams, look for improved cost and efficiency ratios, evidence of better use of capital, evidence of savings, better operational efficiency. And I would rather ignore the speculations of financial statement re-engineering for now until we see the evidence. Auditors definitely know that they have a responsibility to be very, very accurate and very open in terms of these types of issues. And I'm sure KPMG is very much up to the task.
All right. So, I mean, we're looking forward to that audit report from KPMG. But, you know, just after digesting 1.5 billion to rehabilitate refineries, we hear another 2.76 billion was approved for 20% stake in Dangote. You know, refinery, we know it's important. Yeah, we need to stop importing fuel in this country and have our own refineries. But is this the right strategy? A lot of people are looking, and owing to the fact that Mele Kyari has said across board, you know, keep making this investment in other refineries in the country, you know, to be able to ensure that we get something out of it and get constant supplies. That's what he says.
Well, from an Nnpc perspective, one thing we have to understand is that the PIA, that's the Petroleum Industry Act, would see a new Nnpc Limited evolve, which could be materially different from an assets and liabilities perspective. So it may be difficult to really understand why the haste to do this while this kind of complication or transition is still ongoing. But to be more specific to your question, the most important thing in the downstream sector, as far as I'm concerned, is to radically improve the business environment, make it more transparent, more deregulated, more business friendly, and not keep pushing old paradigms. We know why the refinery collapsed. Weak governance and inefficient, slow decision framework does not work with the refineries. And of course, the corruption to be colossal. How much has been invested in these refineries? Nobody executes or south. you cannot continue to divert funds for maintenance or be short of funding and postponing and delaying important decisions. Soon the units will collapse one by one. Of course, we also know that the moguls make more money by importation of products. And you know what that means. And we know why other private companies did not set up refineries. The highly regulated environment with complex subsidy computations and disputes is certainly not an incentive in a thin margin business like refineries. Also, international players are now more sensitive to the energy transition, the glut in products and overcapacity. And with varied predictions on the EV revolution, you know that nobody's rushing to set up a huge refinery apart from maybe Dangote. So most entrepreneurs still complain about the opacity. The question really is, are we doing enough to improve the environment, or are we replaying or revising or intensifying the same scripts and hoping for a better income? When I say the same scripts, government incubated industrialization, very government-centric approaches to industrialization. And I'm not sure that works. Even LLNG, which was a great success, if you look at the delays involved in that project, it may not have been scenario. So the issue is government really should get out of business and be a better regulator, ensuring fairness and competitiveness, and let the market sort out the rest. Everything else, I think, is a bit of noise.
Well, I mean, government is determined to go ahead with the $1.5 billion rehabilitation of those refineries. But in the past, we spent so much money on refinery rehabilitation. Is there something that the government people know that others do not know about what will make this particular effort different from what happened in the past? But okay, after the break, although I was going to add something to that, but let's take this quick break, and then when we return, we'll come back to you, Mr. Ososami. Welcome back to the morning show here on the Arise News channel. Mr. Bode Ososami, Arise business analyst, is still with us. Mr. Ososami, before we went on that break, I'd asked you a question about what is likely to be different this time around with refinery rehabilitation. But earlier on, I wanted to ask you to do a follow-up to what you said earlier about Saudi Aramco, Petrobras, you can add others, Emirate Oil, Petronas, and some of these other oil companies. In 2020, they recorded blips in their, bottom line profits. Only Nigeria is quoting this big figure, and yet those other, oil companies, they operate in a saner environment, if I may use that phrase, with the refineries working. But it's Nnpc with, profit. Non-profit making refineries that is costing 287 billion, and we're supposed to be jubilating.
Well, let me first answer the question on what's different with the refinery revamp. I read a recent interview of the GMD Melekeri. He said three things had fundamentally changed. First, the refinery revamp is financed by Afrexim, that's a private bank, and I understand there are many conditions and detailed program management support and caveats to ensure the bank does not lose its money. I also understand the loan will be paid through future output from the refineries and will not weigh on government debt service, although this will reduce government revenues one way or the other. The due diligence is said to have been very comprehensive, and I suspect the Afrexim Bank will also have secured adequate guarantees beyond the refinery production output. But the MD, Melekari, is saying these conditions and this detailed due diligence is going to make this a tighter, more successful project. Also, according to the GMD, Nnpc will not run the refineries after reviving them. An operations and maintenance contractor will provide performance guarantees and will be empowered to ensure successful refinery operations. So it's like having an operator overseeing the refinery with minimal government meddling and adequate funding supported by the banks and so on. The question is, will the operations and maintenance contractor be free to take quick decisions and adequately funded to ensure maintenance and so on? We have to wait and see. Thirdly, Nnpc is more performance-oriented. the government does not meddle or interfere like maybe it used to before, allowing it to engage more confidently with stakeholders and take decisions faster. But of course, we're going to get new government. So even if we agree this is the case, is this sustainable? In short, the arguments made by Nnpc are based, as far as I'm concerned, on shaky optimism, not backed by previous track record. And analysts will obviously have preferred the refineries brought under the governance of a private sector organization. Experts have also comprehensively examined the refineries and recommended outright sale. So we wait to see if this $1.5 billion adventure works. Now, to the question on the performance of other, indeed, oil companies, especially national oil companies. First, you can't compare these companies with Nnpc. First, we haven't seen these the accounts of Nnpc yet. So it's difficult. And like I just told you, if you use return on capital employed, Nnpc is nowhere compared to these other companies. So my sense is it is most likely, although I don't want to prejudge what you're going to see in those accounts, that Nnpc made some significant adjustments in policy, brought in revenues from other streams, and there may have been some exceptional adjustments. But we wait to hear what the auditors say, and especially their qualifications, and if there are any statements on exceptional performance. It's only then that I can really answer that question more authoritatively. But the other thing, of course, is Nnpc is only just starting. This is just the first account that we are seeing that is looking remotely positive after 44 years. Obviously, any serious investor is going to wait for another 3, 4, 5 years to see that things have changed before they even are influenced by any so-called turnaround claim. So it's a good question you're asking, and I'll be watching out for that and trying to compare, given the fact that the oil prices went down in that period, and definitely we should have expected their performance to have gone down in the upstream sector. But let's wait and see what the results exactly say.
Right. The petrol subsidy issue is still apparently unresolved. How do you think this is likely to play out?
Well, I've always said there are three perspectives at play on petroleum subsidy. The first perspective is the economics argument. Is very obvious. Subsidies don't make sense. They are not affordable. They encourage smuggling. They're a major weight on the fiscal space. They don't even help inclusive growth, and they make it impossible for government to engage in more people infrastructure developments because of the financial implications and the weight on the fiscal. There is also the social issue, the absence of social welfare structures in Nigeria, and the social justice angle in a country that struggles to pay the minimum wage. That's also just recovering from COVID economic stress, presenting social challenges. And according to the NBS, unemployment rate of 33.28%, poverty rate said to be at 40%. There certainly will be pain, and government should perhaps implement wage increases and have remediation measures ready to run before thinking of removing subsidies. The third perspective is the corruption and the racket perspective that provides income to powerful interests as a result of the present arrangement, where only Nnpc imports through its agents. There's a school of thought that suggests these interests are lobbying very strongly for the status quo. And of course, as we enter the expensive election campaign cycle, it is unlikely that these interests will be disturbed. Also, it will be seen as too politically toxic to risk further social instability by lifting subsidies, especially around the time of the election. So my suspicion is that maybe early in 2023, after the elections or so, the subsidy will be lifted. The economy is barely coming back. The government borrowing is at record high. When subsidies go, it most likely will be because the government can just simply not afford to keep it on any longer.
I mean, if you add also the misery index in Nigeria to all of those parameters you've highlighted, you'll see that there's an increasing argument against subsidy. But another one is corruption that continues to rear very ugly head in all of this. We've seen those discoveries of corruption and corruption deals in the Nigerian oil sector. And then comes PIA. Do you think it will help plug all of this, leakages and loopholes in the system? And I mean, what will be your take by extension to this implementation committee set up of the PIA in general and the workings, really, and some bottlenecks that it might face?
Well, my hope, and the hope of many, was that the bill, the act, would see much more radical changes, especially as it has taken so long. There are issues such as checks and balances, especially for the key deciders in the industry, including the minister, and then the ending or qualifying of discretionary powers of the president in awarding of blocks, unbundling of Nnpc in a way so that it can focus on its own core operations and ensuring stronger independence of regulators. Unfortunately, these remain dreams in terms of any amendments. The efficiency of the industry and the plugging of industry leakages, I don't think that was the top thing on the agenda of politicians and citizens. People seem to be caring more about the sharing of the cake rather than getting a much larger cake or stopping leakages. Hence, there was much more focus on host community issues and so on, which is understandable given the gaps in development in oil-producing territory. Also, fighting corruption depends on how this act is executed. I was concerned that the ministry hinted that the Upstream Regulator Commission may have some role in the selling of FG crude, for example. Anything that adds to the process where billions of dollars are involved is a red flag as far as corruption is concerned, even though I also agree this may need to be taken out of Nnpc. So there's still a lot of tightening to be done, tidying up. The PIA can be a good start, but we don't even react to corruption anymore in the oil sector. See the recent case in the US courts. I didn't see any reaction. It's almost as though we are now in a situation where we accept this as a new normal. But like I said, let's give the PIA a chance. On implementation, I think that there are a lot of issues here. Implementation doesn't just happen. It has to be very carefully and professionally and seriously navigated. And I'm not so convinced, particularly as the people who are involved in this committee are politicians. They're going to be very busy trying to get doing the normal thing that happens before elections. I'm not sure they're going to have enough time, the kind of time that you need for serious navigation. But the other thing is there's a lot to be done. Legislation is just a small part, although it's a very important part. The fact that it took almost 20 years was more because of the policy. Just 6 months or so. Processes, systems need to be re-engineered, and not just appointments. Institutions need to be rebuilt and reconstructed, made more fit for purpose and ready for a different energy landscape. So a lot of work certainly needs to be done that is not necessarily going to make headlines. And this is beyond congressmen and government congratulating themselves for passing an act after pushing it up and down for almost 20 years or more. So my sense is the work is really just starting. There could be false starts, which is okay, and performance dips along the way. But what matters is there has to be a very clear leadership and clear vision. And we have to see a trajectory of improvement, which, of course, we'll have to closely watch. Like I've said, the PIA, and I think that is already ongoing, will require some tightening. There's some areas that, of course, will be amended. And even if there are false starts, there is need for stamina in terms of implementation to stay the course. So the government has to be clear what the objectives are, what the KPIs are for the industry, so that there is some basis for this navigation. Some of the things that they have to watch, for example, the kickoff of new refineries. That's a way of measuring whether this is working. Another thing that we have to watch, growth and value added, including local content, contribution to the oil sector. We have to watch FDI, foreign direct investment in the oil sector, of capital of this new Nnpc Limited compared to peers. So like I said, the takeoff that is urgently required in the energy sector.
Okay, thank you very much, Mr. Bode Ososami. That's all we'll be able to take on this segment. Thank you very much indeed for your insight.